In a previous episode, we took a look at what happens to the housing market when interest rates rise. But what happens when things start going the other way around and interest rates start coming down? Find out the answer to this question and more in this episode of The Lead. At the time of shooting this video, we're fresh off 2 quarter percentage point cuts into an interest rate cutting cycle that the Bank of Canada kicked off in June 2024. How deep this cycle will be still remains a mystery at this point. But that doesn't mean we can't say anything interesting or useful about the impact of rate cuts on the housing market. If we go all the way back in the data to the 1980s, we've got a number of historical periods we can look at where interest rates were declining. Using this information, in conjunction with historical housing market data, we can build up our understanding of what the future might hold if the Bank of Canada continues bringing down the policy rate as they've said they intend to. So let's take a look at what happened to the Greater Vancouver housing market when the Bank of Canada cut interest rates in previous rate cutting cycles. Now, because of the close linkage between mortgage rates and interest rates, the first place rate cuts tend to show up in the housing market is in transaction levels, or sales. And the reason for that is because when home buyers go to the bank to borrow money, they suddenly have access to a lot more borrowing power, which opens up a lot more options for them. So typically, that translates to more deals getting done. To make this a bit easier to visualize, let's take a look at a plot showing what happened to home sales in Greater Vancouver relative to their initial levels when each rate cutting cycle started. We can see that during most previous cutting cycles, sales volumes tended to increase in the 24 months following the start of each cutting cycle. There's a few notable exceptions in the early 1980s, as well as around the Great Financial Crisis era, somewhere around 2007-ish. And these are actually kind of interesting data points because they're also periods in which there was a significant degree of economic turmoil, which adds some interesting context to the picture. But just looking at the general pattern, it seems like sales volumes tended to pick up fairly quickly once a cutting cycle was well underway. It's not a perfectly mechanical relationship, but there's definitely a pretty strong correlation, which is a good thing if we want to make some inferences about the future. But with all the heightened attention around affordability these days, the other facet of the housing market that rate cutting cycles tend to impact are home prices. So here's a plot showing the impact of previous rate cutting cycles to home prices in the Greater Vancouver housing market. One of the first things that jumps out from the chart is that just like with home sales, cutting cycles aren't always associated with higher home prices. And if we focus in on the time scale, we have a bit of a clue as to why. We can see that in the few cases where prices didn't rise in the face of rate cuts, the economy had some problems. The early 1980s and early to mid-1990s were periods marred with economic recessions, or a period where we were just coming out of one. And when you have periods like this, with rates of unemployment that are running high, this can be a factor mitigating the ability of homebuyers to push up the price of housing using cheap debt. Another interesting thing to note about these price trends is they also tend to lag the impact on sales, where we saw the impact being rather immediate. When it comes to prices, it can take some time before we start seeing any significant effects, although the huge boom bust of the early 1980s clearly stands out in the data. So don't you all go rushing out to buy houses thinking it's some kind of near-term gold rush. We've just seen that prices don't always increase in the short run, because it depends on what's going on in the economy more generally. There's a reason that people say that real estate is a long game. So for most people, it's usually best to buy and hold rather than trying to time the market like some kind of day trader. But here we are, 2 small rate cuts into a fresh new cutting cycle. What should we be expecting the market to do over the coming years and months? Well, we've seen that historically speaking, if things aren't too bad in the general economy, cutting cycles can have an inflationary effect on home sales and on home prices. But how big these effects may be kind of hinges on a lot of factors. If we were to get a big recession, for example, it's possible we might not see increases to sales and prices at all, despite lower borrowing costs. But if things stay copacetic, as we're kind of expecting at the moment, maybe we'll see sales activity pick up, which would probably translate to lower inventory, which would probably translate to rising prices. But as I always say, anything can happen. So there you have it, rate cuts and the impact on the Greater Vancouver housing market, all in under 5 minutes. Thanks for watching, and stay tuned for future episodes of The Lead.